Credit score. The number that prices your life level 300 when the system already decided your cost at the lowest end of the credit system. Your number sits somewhere around 300, but it doesn't feel like a number. It feels like a label you never agreed to carry. You didn't apply for it. You didn't choose it. Yet it defines how everything responds to you financially. You try to get a basic credit card and the answer is immediate rejection. No explanation that feels useful, just a silent confirmation that the system has already categorized you. Even the smallest financial trust is denied before conversation begins. You look for a place to live, and the price is no longer just rent. It becomes deposits, conditions, extra guarantees, and upfront payments that double the cost before you even move in. The system is not refusing you, it is pricing risk. Transportation becomes another version of that same reality. No bank will step in for you. You end up at places where approval is easier but interest rates are extreme, where ownership costs far more than value. The car is not expensive, the access is. Even basic phone plans disappear from normal financing. You pay up front because trust is not extended to you in monthly form. Everything becomes prepaid because nothing about your history invites deferred payment. Insurance follows the same logic. Your history, not your behavior, determines your monthly cost. Even without claims, your presence alone adjusts pricing upward. At this stage, the system is not ignoring you. It is actively accounting for you in the most expensive way possible. You're not invisible. You're high risk on record. Every financial door is closed, but not locked. It is just priced so high that walking through it feels like loss before gain. And the most difficult part is not the rejection. It is understanding that nothing is personal. It is mathematical. At 300, your financial identity is not about what you earn. It is about how much extra everything costs you just to participate. Level 500, WHEN. You start climbing slowly at 500. The system begins to recognize small movement, but it does not reward it generously. It only reduces punishment slightly. You are still inside the expensive tier, just closer to the edge of it. A collection account gets cleared. A few payments are finally recorded correctly. The system updates slowly, like it is not convinced yet that you are consistent. You qualify for your first secured credit card, but it is not real credit in the traditional sense. You give your own money as a deposit and are allowed to borrow it back in controlled form. The limits are small, fees are high, and interest is still unforgiving. But now there is a trace of history being built, even if the system is cautious about it. Loans are possible, but they come with rates that feel more like penalties than opportunities. Every percentage point adds long-term weight that you can already calculate in your head. Housing becomes slightly more flexible, but only in areas where demand is lower or conditions are stricter. You are no longer fully excluded, but you are still filtered. At this stage, the system does not trust you, but it is willing to observe you. An observation is the first step toward recognition. Every on-time payment is no longer just action. It is evidence being recorded quietly in your file. But the reward is still minimal compared to the effort required. You're improving, but not yet rewarded for improving. That imbalance defines this entire range. Level 600. When the system starts to respond at 600, something shifts for the first time. Not dramatically, but measurably. You begin to pass basic thresholds that once blocked you completely. A secured card becomes an unsecured one. Deposits are returned. That feels like the first moment the system acknowledges trust instead of demanding proof endlessly. Credit limits slowly increase, not because you asked well, but because your behavior stayed stable long enough to justify change. Stability becomes your currency. You begin using credit not as survival backup, but as a controlled tool. Small balances, paid off consistently, become your pattern instead of emergency usage. Interest rates are still high, but not extreme anymore. The difference is subtle, but financially meaningful over time. Loans are still expensive, but no longer predatory in structure. You are no longer at the bottom tier, but you are still far from preferred. Housing applications stop being automatic rejections. Now they are conditional approvals with higher deposits and stricter terms. The system is no longer pushing you out completely. It is letting you participate, but carefully. At this level, credit is no longer punishment. It is probation. And probation always comes with rules you cannot afford to break. You begin realizing that every decision now contributes to whether you move forward or stay stuck in this middle zone. Consistency becomes more valuable than effort. Because effort alone is not enough to move systems designed around trust over time. Level 700, when money starts working differently. At 700, the structure of your financial life changes more noticeably. You are no longer treated as risky by default. You are treated as standard. Credit cards begin offering rewards instead of just access. Cashback, points, benefits that reward spending instead of punishing it. Loan rates drop significantly. The same car, the same home, the same loan amount suddenly costs far less over time. Not because the item changed, but because your number did. Mortgage approvals become realistic instead of theoretical. You are no longer fighting to qualify. You are choosing between options. Insurance premiums begin to drop quietly. No announcement, no celebration, just reduced monthly costs without explanation unless you look closely. At this stage, the financial system starts competing for your attention instead of restricting it. Your offers come to you instead of you chasing approval. The difference between 650 and 700 is not just points. It is a structural shift in pricing behavior. You realize that money does not just depend on income. It depends on how you are classified by systems that never meet you personally. And classification determines cost more than effort ever did. At 700, you are not rich, but you are no longer penalized for existing in the system. That alone changes everything about how money flows around you. Level 760, when you become preferred at 760, the system stops treating you as a participant and starts treating you as a reliable asset. You're no longer evaluated for risk in the same way. Loan rates drop to their lowest advertised tiers. You are offered the same products at better terms, without negotiation. Credit cards begin competing for you. Premium travel cards, reward systems, and benefits are now accessible without resistance. Mortgages become significantly cheaper compared to lower tiers. Over decades, this difference translates into massive savings without changing anything except your number. Rental approvals become smooth. Deposits reduce or disappear. You are no longer questioned heavily before approval. Even small financial actions begin stacking benefits instead of costs. Your spending earns value instead of absorbing penalties. At this level, financial behavior no longer feels defensive. It becomes strategic. You are not trying to survive the system anymore. You are optimizing within it. An optimization changes how you view every financial decision moving forward. Because now, even small percentage differences translate into large real-world outcomes. Level 820, when the system has nothing left to penalize at 820 and above, the financial system has very little left to punish. Everything that once carried risk has been neutralized through time and consistency. Your credit file becomes clean, stable, and predictable. Lenders no longer analyze whether you can be trusted. They assume it by default. Rates offered to you are nearly identical to the best available in the system. There is no hidden penalty layer anymore. You begin receiving pre-approved offers for products you did not apply for. The system now comes to you first. Mortgage rates drop to their lowest brackets, saving hundreds of thousands over long periods without changing the asset itself. Even major financial decisions feel lighter because costs has been optimized by history, not negotiation. At this level, credit is no longer about access, it is about advantage. You are no longer climbing the system. You are operating at the top tier of its trust structure. And the only thing left that changes outcomes is time itself. Final truth. What credit score really measures a credit score is not a reflection of intelligence or effort. It is a record of behavior under financial pressure over time. It does not measure potential. It measures consistency. Every point represents trust accumulated slowly through repetition. Every missed payment represents friction that takes time to repair. The system does not remember excuses. It only remembers patterns. From 300 to 850, nothing changes instantly. Everything changes gradually through repetition that either builds trust or erodes it. And the most important realization is this: the system does not reward speed, it rewards time. You are not being judged on your current moment. You are being priced based on your past behavior, which means your future is not locked. It is being written continuously. Every on-time payment is a small correction toward a different version of your financial life, and the distance between expensive and affordable is not income. It is time multiplied by discipline.